Hey everyone, this is Kirk here again at Option Alpha. So welcome back to the behind the scenes series. This is part number 3 for my journey on trying to find a 1 DTE strategy. So I already have some 0 DTE strategies that I run, but I wanted to add a 1 DTE strategy. And I've been kind of doing this behind the scenes, walking through the process of backtesting and exploring different ideas. Some have worked, some have kind of not worked. We're trying to figure out where we're going to be going. So this is our current baseline from the last video that I did. Again, we'll have links to all the other videos. If you're new to this series, you want to go back through and watch it from the beginning, you can do that. The links are going to be right below this video. This is the current baseline that we have right now for this one. And you can see I actually reran this baseline just for the last couple weeks since the last video, and it's done pretty well. Still, this is the baseline that we're working with. This current version that we have right here is looking at $5 wide strikes. And again, it's running a next day 1 day DTE trading strategy where we're selling an iron condor with $5 wide strikes, $5 above and below the market. So basically right around where the market's trading at about 3:30 in the afternoon. So this thing would enter a position, say today, which is Tuesday, at 3:30, and then hold the position through Wednesday's close. So it would enter a position today in the afternoon, hold that position overnight, and then through the next day into the close. And you can see what we're doing here in this case is we kind of got to this current version that we're working with, is we got to the point where we were filtering out RSI that was kind of at the extremes. So I would say a low-level filter. It didn't do much from the last ones. It didn't filter out hundreds of trades. It was kind of like, let's get the extremes out of the way. So if we have an extreme day where it's likely that we're going to have more volatility to follow, which is typically what happens, is volatility kind of clusters together, we've seen. So we're going to filter that out with the extreme movements. Same thing with generally with the gaps. So 1% gaps, we're going to filter those out. 1% changes, we filter those out. So these are, again, just trying to get rid of all of the additional extreme movements. So I just want to focus on the days where it's likely then the next day to stay in a range, right? So that's kind of the idea with these filters, and they seem to, again, have worked so far. And then the last one that we added that seemed to do okay was above the 10-day SMA, which was pretty good. So we don't want to be in a big downtrend where the market's just crashing and crashing lower. We're going to skip those days. We can do other things on those days or not trade at all for this one. And so we skip those ones as well. So now what we have to do is we have to figure out, okay, where do we go from here? So for the record, I like this one as a baseline. So I've thought about it for a long time. It's a good baseline. So if we can't dramatically improve it from here or get some marginal improvement from here, then probably going with this baseline is pretty good. I do worry that at some point you add too many things, it becomes kind of complicated. So I do want to go through it, try to test another thing, see if it works out. I'm doing this with you guys here. And if we find something great, if we don't, then I'm okay actually going with this baseline. It's a pretty good strategy and I'm okay running it. So first thing that we're going to do here is we're going to go up to the compare button on the top, and that's going to get us into compare mode. And then what we can do is we can click the little 3 dots here and go down to add a variation. And when I add a variation, it's going to pull up the exact same strategy here. And what I can do is I can tweak one thing in the strategy or a couple things in the strategy. So I'll just kind of go through this here so you can see. By the way, we're skipping FOMC days. We're definitely including slippage, as we talked about many times in videos. We include slippage in and on the way out, even though it expires. We include that slippage in there just as a default setting for everything. So the one thing that I am going to test here is I am going to test a different indicator. And so the one indicator that I'm going to test is CCI. And I like CCI because I've used it before. Sometimes I don't use it all the times. But again, what I saw in this one is that if we filter out the extremes so far, and if we just generally are trying to target, like think conceptually about the strategy is an iron condor tight around the market where we want the price to stay in that range the next day. So we're not trying to get some extreme moves. We're trying to go for those tight ranges. And so what we want to do here is with CCI is we're going to try a minimum of 0. So that's actually going to be it. So CCI actually ranges between like negative 100 to 200 and positive 100 to 200, right? So it has some extremes. But generally you would say above 0 is uptrending or bullish or whatever the case is. There's some different interpretations of it, but above the 0 barrier for CCI would be kind of more positive-ish type movement. So if we just kind of filter that out, which kind of goes along with the above 10-day SMA, then it would suggest maybe we only get into positions when the market is generally a little bit calmer, maybe more in an uptrend versus downtrend, sideways action. That's where we would try to take this thing. So I'm going to just include that. And I'm going to add here to this one that we're going to do CCI as 0 plus, just to keep this thing rolling the right way. Again, I have no profit taking on here. We tested that before. Didn't really seem to move the needle. So we're just going to let the positions run to expiration. This is SPX, so it can run to expiration, just be cash settled. We don't have to worry about assignment of shares. So it makes it work out pretty well. So we're going to do CCI as +0. So we're going to do that one at the same time that one is running. We're going to add another variation just to test it out here and see if anything kind of moves the needle around these. So we'll do CCI +50, and then we'll also do +100. I don't know, honestly. I'm talking through this as I go, but I don't know about 100 because I think 100 might filter out a lot of things, and we might get a really low trade count, which could be good if you want to run it. You could run it that way if you want to, but we'll see. I don't know. I don't know if that would be my assumption, is that it filters out way too many. If you do like 100 or 150, you may not get enough trades. You might find some good trades for sure, but I kind of want to balance the idea of having, consistently getting into trades, or rather consistently getting into trades, versus not trading at all or waiting, for 10 trades a year. So those are results. We'll pause it right here. We'll come back when those are done finished. Okay, so those results just finished running. Actually decently interesting. So you actually can't really see the blue line, which is our A result here. So it didn't move the needle dramatically. So that's number one. Just visually, you can see this too, where, it's not like we had a chart that went like this and it crashed it, or it started to go up like this. So we're still not getting dramatic improvements from this. I think the reason that we don't get dramatic improvements from this is because we're already filtering for positions above the 10 moving average or the 10-day moving average. So we're already kind of getting that, that feeling that the positions are starting to move up a little bit, but it's another one to throw in there. I think what is interesting, just kind of glancing at this right now, is you look at above the 0, so just 0, there wasn't much difference between test A and test B at that level. So you had a little bit more trades get filtered out. There wasn't too much of a difference. You had marginal improvement in win rate. The profit factor, not really a big improvement. Total P&L actually went down for those cases. You did have a max drawdown that was slightly lower, so maybe you missed out on a couple losing trades in that range. But there wasn't significant improvement for that. If you saw test number C here, this was CCI above 50. There actually was a pretty big bump here. You can see it was actually, I'm just looking at it now, but there was a pretty big bump, and it was the only one that actually had a significant improvement in the P&L. So you saw a big bump. You saw a big bump in profit factor. This one also had a good bump in profit factor, but the total P&L was significantly lower. You also got, of course, higher win rate here if you're filtering out for 100 CCI. That made a lot of sense, but you did have significantly less trades, 239 versus 369. I like the higher trade count, broadly speaking. I'm not into strategies personally where there's only 10 trades or a couple hundred trades. I want some higher trade counts because I feel more comfortable with those numbers. You go down to some of these numbers here, reward to risk ratios. This one was pretty good still. You still had good return on risk. This one was a little bit higher because you did filter these out, but you're kind of capturing these already in this one too. So these trades here are just like a subset of these ones that are kind of captured in here. So you were capturing those good trades above 100, of course, if it was still above 50. Just broadly looking at it, it looks like above 50 is an okay one. It's actually the only one. You can see the C chart here, which is kind of purple. This is the one that actually is the only one that visually jumps on the screen as having better performance. In some cases, you avoided some dips and some drawdowns, which were higher than some of the other lows in here. So that was good. So I think actually, kind of using this as a, again, one potential additional framework might be a good way to go. So it doesn't hurt, obviously. It didn't dramatically cut the trade count down. So it might actually be something to include there. So let's do this. What I'm going to do is I'm going to open up this one in a new tab. This is going to be the CCI one. By the way, I'll add a link to all of these in the video description below so you can take a look at all of these yourselves and go through the results yourselves. So this is our new baseline that we're going to work with. I do want to compare one additional thing, which I think is interesting, and I've thought about doing this, which is to add a variation that goes a little bit wider in strikes. I think we did this before with some of the other strategies, but not on this kind of final one. So my issue or thought process around this is if we have strikes that are $5 below and $5 above for this iron condor, we're basically getting into a very narrow iron condor. So, and that's the goal of the strategy. So the goal of the strategy is to get into a narrow iron condor, at least the one that we found. And you're taking in a lot of premium. So on a $5 wide position, you're taking in $400. Again, so you got a $5 wide position, so you're risking a little bit of money. So win rate's not 90%, 70% or whatever. It's in the 20s, 30s win rate. So you're going to take some of these little losses and then hit a couple winners. That's the goal of the strategy, broadly speaking. And since it's cash settled, you might do a lot of that. So what I wanted to test out, though, is I wanted to test out, okay, what if we go a little bit wider on this position? So instead of going $5 below on the leg width, what if we go $10 wide? And so this would be, of course, a little bit more risk per position. So instead of getting into a position that's $5 wide, you're getting into a position that's $10 wide. We still have our short strikes $5 above and below the market. So the short strikes are still at the same level. We still have the same range. But because we're going a little bit wider on those outside legs, what this does is it allows us to maybe capture more premium and potentially see an increase in the win rate. And we'll have to see if this actually improves it or not, because it does increase the risk per position. So what I'm going to be looking for is what happens to the max drawdown, what happens to the, the number of trades that are losers, like what are those kind of metrics look like? But that's kind of the concept around testing this idea is, okay, we know the $5 works pretty well. So if we try to optimize it maybe a little bit, go a little bit wider here, a little bit bigger positions, does it actually pay out in the end? So we're going to do that. We're going to do all the same stuff. Here we're going to do $10 strikes instead. So we'll just update this to $10 strikes and then go ahead and run this back test. So we'll pause here. We'll come right back when this one is finished. Okay, so here are the results. And actually, for good measure, while it was paused, I actually ran one that was 15 strikes wide as well. So that's test number C, just so we can see what 5, 10, and 15 look like. Obviously, the charts are significantly different. This is the $15 wide strikes. These are the 10s, and this is our baseline $5 wide strikes. It makes total sense that the wider strikes would, of course, make more money. So as you progressively get wider in strikes and you start effectively starting to get wider and wider and taking more credits, overall, you're going to make more money. The key is was it worth it to do it? So if you look at some of these stats here to begin with, and I'm just kind of looking at these ones here. So obviously, total P&L went up. You see the max risk at any one point was obviously a little bit higher. So we did see some max risk. The max drawdown, of course, went up as well. So this is to be expected to some degree, but it needs to be a consideration for your trading. So if you're trading in a small account where you got $10,000, I don't know how many people could stomach a $4,600 drawdown for one individual strategy. In fact, I would say that nobody could probably stomach that. So if you have a small account, then C and B are probably not the ones, right? You can probably more stomach this, which is a 10% drawdown in a $10,000 account. But the profit factor on these trades did not get significantly better. So that was like one thing that I looked at immediately where I'm like, it's not like we had significantly better profit factors on these trades. If you look at some of the other position stats, you can see we did have improving win rates. Again, that's kind of expected because you're taking in more credit, you're going wider, so you're more likely to land inside of that zone as you go. This is more of like how do you want your strategy to go as you start to progress? It's like, do you feel better with a higher win rate? I know a lot of people try not to trade on emotions, but they end up trading on emotions where they're not comfortable if the win rate is, 1 out of or 2 out of 10 or 3 out of 10. They want to get some higher win rate trades. I don't care about that personally, as long as the strategy overall makes money and has good other metrics and kind of fits better into the portfolio. I have other strategies that should target higher win rates. I don't need to feel that because I have bots, so I'm okay with that. If you go down here to some of the other metrics, what you did see here is you, of course, saw your reward to risk ratio start to decline as you went out. So the smaller entry, the more narrow entry had the better risk to reward ratio, the better return on risk. These were the better positions from these metrics as well. And again, the losses here were a little bit manageable. So if you take this loss and then again multiply it by the losing streak at any one point, that's certainly more manageable than if you were losing $375 a day and you did that for 11 days in a row. That would be very, very tough for any trader. And in some cases, you'd probably turn off the strategy and curse trading altogether. So I think from this metric, you can see obviously if you go wider, you're doing good. I'm still going to stick with number A just because it's a new strategy. I can scale up if I want to scale up. I can change it if I want to change it. I'll keep this in my back pocket for sure. I still like A because I'm a conservative guy. I like the profit factor is still good. I'm still good with the win rate, 3 out of 30% of the time roughly. And the drawdown and the max losses are reasonable for this strategy. So I feel good about adding this one because I can reasonably add it to my portfolio without having this huge potential to go on a big run that gives a big drawdown for the other positions. So that's what I'm going to do. So I'm going to run with strategy number A. I do like this one. I think it's one I want to start trading. Actually, it's funny. If I would have started trading strategy number A at the time that we did the video, it would have been on a really, really good run. So the likely end result is that if I start trading this, it might go through a drawdown right away, but that's okay. I'm in it for the long run. So what I'm going to do when I want to start trading strategy number A is I'm going to go up to the 3 dots next to A. I'm going to create a bot. I'm going to call this, so we'll give this a little star. We'll give it 1 DTE, narrow iron condor. You can even say SPX so I know what it is. I'm going to throw this into my TradeStation account, give it some allocation. We can just start it with, 10,000. Actually, we can start it with 5,000. It can start with something lower. And it's not going to trade all that anyway, so it's just a starting capital position. So you can go in there. It's set up right now to scan once per day at 3:30. Now, what I usually do with all of these is I don't want to try one specific time. What I want to do is I want to try to get into the position around that 3:30 timeline. So what I do is I do usually around 10 minutes on either side of the day. So I will go around 3:30 to, or 3:20 to 3:40. That kind of targets around that 3:30 range. So that's okay. I'm okay doing that. Trade pricing, I will always do from the mid. So we'll do $5 to 5 cents a slippage from the mid. That's all by default in here. You can do that again, 5 cents a slippage from the mid. And then what I'm going to do here is create the bot. Now the bot is created. Again, it was just created from the back test that we have. So now I have my 1DTE bot here. You can see I have that one. So it's my 1DTE bot. It's connected to my TradeStation account. By default, it's off for automations, right? So automations are turned off until you turn them on, but the automation's already created. So it's going to say, can the bot open a new position today? Did it pass all the market conditions? One key thing here is that with the 1 DTE positions, you actually have 2 grouped decisions in here for FOMC that get added. If you check the box that says skip FOMC days, not only are you going to skip the days where an FOMC meeting is scheduled, so you're not going to enter a position right after the Fed in the afternoon, but you're also not going to enter a position the day before the Fed announces. So if I turn this one on today, which is Tuesday, and this is Fed week, it won't trade through that Fed event. So we definitely won't have any trades through there. And then again, you can see all the other additional things here that it needs to pass. So is the gap low? Is the change low? These are all kind of our filters. And then you had your one other set of checks, which is CCI is above 50, RSI is above 20 and below 80, and the 10-day is, or SPX is above its 10-day moving average. So these are all of your other technical indicators that you added in there as well. So that all kind of checks out. If it gets to that point, then it again opens that position just how we had it set up in the back test. So we know exactly what we're doing here. So again, this is all pre-set up for you. So all I have to do is literally turn on the bot and let it start working. So hopefully you enjoyed this video. If you do have any other questions, please let us know in the comments below. If you enjoyed this little behind the scenes series on finding my 1DT strategy, please let me know as well. Like, share, subscribe, and send this video to a bunch of your friends or trading buddies that you have. Help spread the word about what we're trying to do here at Option Alpha. As always, we'll have links to everything that we talked about here today right below this video if you want to check it out. And until next time, happy trading.